Hey guys, first off, huge thank you to everyone who wished me a happy birthday yesterday. Really appreciate it. I had a lot of fun getting to interact with so many of you and getting those stock picks to you. If you missed it, you're unfortunately too late. But don't worry, I asked my team to unlock my large cap momentum trading for you today so you can review some of the best trading tips that I have to offer my students. Just click right here below to access it now. All right, we're in my lab, and what we're looking at is the S&P 500. The FOMC just came out. The Fed said they're going to lower rates. That means higher bond prices, lower interest rates, higher bonds. And I want to show you something interesting. This is the S&P 500. We're at all-time highs yesterday, that little green bar. But this is the RSI. This is the 10-day RSI oscillator, and it's telling us that stocks right now are overbought. Look at what happened last time. When the RSI hit overbought level, we went all the way from 302 to about 285. Now we're about 304. And it looks like we're going to hit the 50-day line if things keep moving the way they are. Because I expected with a rate drop that the stocks would go higher, but they're not. They're pricing it in. Also, after the close today, in just a little bit, we've got earnings coming out for Apple. All right? Why is this important? Because Apple looks like it peaked out and it's coming out. Usually, when stocks rally like this before earnings, by the time earnings come out, it's too late and the stock was overbought for the last several sessions. And Apple has tons of market cap. So if Apple moves lower and the S&P moves lower, what does that mean for the bond market? TLT is a ticker symbol. It's a bond ETF. It tracks the long bond, the 30-year or the 10-year bond. Doesn't matter which ones, they're correlated very highly. We didn't go all the way to the 200-day moving average, but we did reach the what I call the twilight zone, which is where we're between the 50-day and the 200-day line. Now, what happens when we're in that situation, what happens in that case is usually we start seeing the RSI move to oversold territory. When it moves to oversold territory, the bond market begins to rally, which is what we're seeing right now. So I'm expecting stocks to begin moving lower to the 50-day line. They're overbought right now. And I'm expecting bonds to begin rallying. Because anytime stocks move lower, bonds rally. Now, let me show you something really interesting and eye-opening, all right? If you look at stocks right now, if you look at market momentum levels, you will see this is the overall market, not the S&P 500. Only 52% of stocks are trading above the 200-day moving average. That means while the S&P is overbought, the rest of the market's barely neutral. It's literally hanging on to the bulls by 2.15%. If just a couple of stocks, literally a couple of stocks trade lower, we're going to be in a bearish market. But if you look at the S&P 500, let me show you this right here, you will see that about 68% of stocks are trading above the 200-day moving average. And that's not very bullish. I mean, that's too bullish. So what you're seeing here is this is a 2-year chart of momentum. This is percentage of stocks trading above the 200-day moving average. And look, we're already beginning to come down. Let's look at it on a 9-month time frame. We're already below our resistance level right here, and we're moving towards the 50-day line. Now, lastly, to prove my case to you, let me show you. This is the Russell 2000. Not seeing any upside. Till we look at this, already moving off of resistance all the way down. And put to call ratio is telling us that we're overbought. In a nutshell, everything is pointing to a little bit of a correction, just a mild correction. Not a raging bear market, not a crash, just a little pullback, which should take the SPY, let me show you, up to about the 296, from 302 to 296 level, and maybe possibly to 288. I don't think we're going to go bear because interest rates just keep going lower and lower, and that's offering support for stocks. But I think stocks are going to remain choppy. And whenever they're near the area they're at right now, right about to break lower, that's the best time to look at TLT, which is the long bond, which tracks up. Now, I got a little bonus for you today. let's say you trade options. Let me show you some good options right now on the TLT. I would right now, if I was going to go buying, now this is usually reserved for my premium members. I would go out about somewhere mid-January, and I would hold this option. This is about 79 days till expiration. I would hold this option till it has about a month till expiration. We're at 138 right now. I would be looking right now. Open interest is really high. I would be looking somewhere around the 139-ish, 140-ish level right here. Probably right where the open interest is really high at 14,969, and the spread is like 1 penny. These are really tight. And I believe the delta on these, which is the sensitivity of the option to the underlying assets, probably about 60%. So for every point that the underlying moves up, if this moves to 140, this will be at about 320, 350. So it'll give you about 60 cents for every dollar move in the underlying, and it has plenty of time. But don't hold this too long. Don't let it overstay its welcome. Only hold it for about 25, 20 days and then move forward. Again, I think the bond market's going to pull back higher. I think stocks are going to move slightly lower, just a little bit lower. I think this is the best natural hedge you could find right now. I think everything that's known about the U.S. market is already known. Earnings are medium. Again, expect stocks to move slightly lower and bonds to spike, which is usually what happens when stocks move towards the 50-day or the 200-day moving average. So let's think about this for a minute. Let's be logical. The markets, they're at an all-time high. They probably need to pull back from here. It makes sense, right? Bonds, they're grossly overpriced, and they're primed to get a quick spike if the market pulls back. So what are you waiting for? Click the button below. I'm showing you my number one bond to invest in right now. This isn't some lousy buy and hold that's going to get you 2% annual returns. These are in and out quick hitters. They've earned us more than 500% on our money in less than 14 days. Tap the button below, and I'll tell you all about it.